People come to Phuket for investments and capital growth. But here is the harsh reality. Most properties on the island won't give you the returns that were promised by either the developer or the agent. Moreover, the most profitable units don't even appear on the open market. In this video, I'll explain how to buy property in Phuket below market value through bulk buyouts, and what distressed assets are and where you can find them. At the end of this video, I'll tell you about 3 properties in different price segments that can be bought for 20 or even 25% below the developer's price. I'll also explain how this mechanism works and how much you can earn in just a couple of years by reselling such properties. And my name is Diana Fedorova, and for 11 years now I've been working in investment real estate. My company, Deep Phuket Property, operates in this market as well as in safe jurisdictions like Dubai and sometimes Bali. I can't say that Bali is a super safe jurisdiction, but nevertheless, we also handle deals there for those investors who are just completely in love with that island. You probably understand that not all properties in Phuket are liquid. Liquid properties are only those located right by the beach with their own infrastructure on site, because tourists provide your occupancy. And it's not yearly contracts, it's daily rentals. So there must be magnets of attraction, reasons why people will choose your property specifically. Naturally, the management company also plays a role. Ideally, it should be a branded one. Regarding all these investment real estate criteria, I have separate videos on my YouTube channel. I definitely recommend watching them if you're interested in any resort real estate, not necessarily just in Phuket. And fourth is, of course, the quality of construction. Many properties built 15 to 20 years ago are indeed still in demand, especially those in the lagoon right on the golf course near Bang Tao Beach. But even if you take on their renovation, you'll be surprised how much needs to be replaced, including wiring, plumbing, repainting, and so on. So that doesn't always turn out to be economically viable. But with today's new construction technologies, using aluminum, stainless steel everywhere, and glass facades, such properties will still look great in 20 or 30 years. In short, technologies change, and therefore construction quality doesn't stand still either. Liquid properties must simply meet the investment criteria I just outlined. If your property is located even a kilometer from the beach, that's it, it's real estate that nobody wants. Guys, sorry to the developers and agents for raining on your parade, but really, a person won't walk a kilometer to the beach in 30-degree heat. That means they have to rent a car or a bike, and it turns out that whether it's a 1-minute or a 5-minute drive to the beach, it doesn't matter to them. They have to drive anyway, so they'll just stay wherever it's cheaper. But our money, the investor money from daily rentals, is only in those properties located right by the beach. Up to 500 meters, 500 meters is the absolute limit where I'd heartily recommend investing. I consider everything else illiquid, specifically when it comes to condominiums. Villas are a slightly different story. We're not talking about that right now. I have entire separate episodes about villas. Truly liquid properties that meet the investment criteria I've listed start at around $190,000 to $200,000. Of course, you can find properties for $100,000, but they won't be investment grade. Don't fool yourself and don't just chase the price per square meter. You should always base your decision on the specific features that will ensure this property generates dividend income. When buying at the developer's price, there are certainly some properties where you can still make a good profit from capital appreciation and future operation. Here you need to look at the total number of units in the complex itself. Take, for example, a highly publicized development on Phuket with about 1,000 units under construction. 95% of the island's agents are actively pushing this developer. I think many of my viewers know exactly who I'm talking about. But you have to realize that when a complex has 1,000 units and all the investors buy, say half for resale and half for rent, who are those 500 units? They're your competitors for the future resale and liquidation of the property. And naturally, it leads to mindless price dumping among investors who all bought with the goal of making a profit. The situation is, well, obvious. It turns out people who bought for, say, 4 million baht are trying to exit at the same price 2 years later because the competition is fierce. New properties keep hitting the market and people are just trying to offload their units however they can. So, to avoid all this, you should definitely buy properties, preferably in boutique projects, where there's less competition in terms of segmentation. I mean, if a project only has studios, that's not great. It's better if there are, say, 51 bedrooms and 52 bedrooms. Basically, you want to avoid high internal competition. Of course, the presence of a management company and how they distribute income also matters, like the rental pool system where profits are shared equally among all investors. And regardless of whether your specific unit was rented or your neighbors, you still earn money. Then there's the model where you only get profit from your actual unit being rented. In that case, there's a big risk that either your agent or the management company won't be interested in renting out your specific property. So the unit might sit empty, especially during the low season. There are so many intricacies and nuances, but in this video, we're focusing more on distressed assets, how to buy below market value and why. And over the last 2 to 3 years, we've seen a very sharp downward trend in rental rates across various segments. Because in Bang Tao, why do I talk about Bang Tao so often? Because I've lived here myself for 11 years. This is the most European district, the one that's capitalizing the most. And a lot of developers are specifically located right here. And this construction boom, it started just a few years ago. And over literally the last, well, not even 2 or 3 years, but even just 1 year, there's a very clear drop in value for properties that aren't right on the shoreline. So, my dear investors, I have a good, high-quality solution for you. Finally, let's break down what distressed assets and bulk buyouts are. Let's start with the fact that there are 2 types of distressed assets: primary and secondary market. Distressed assets are when you enter way below the market, both in terms of cadastral value and the developer's price, and this can be achieved in various ways. If we're talking about the secondary market, then of course these are offers coming directly from the property owners themselves who need money urgently and they're ready to exit and resell something immediately. Of course, in this case, the investor must be prepared and already have the funds ready to go, being fully prepared to enter the deal. Because such offers are just juicy, good and liquid, they are of course well snapped up right then and there. Investors hunt for these specific offers and they aren't available to the general public. And the second type of distressed assets is, for example, on the primary market. There are 2 options here. There's the assignment option when, for example, someone can't keep up with their installment payments. It's also a great topic because the person, as it turns out, bought, say, at the excavation stage at the initial price. By this time, the developer has already received the building permit, all the documentation, and has already built a certain number of floors. And for example, a person finds themselves in a situation where they can't continue paying. Well, the investor is only too happy because they're buying a partially built property at that initial price. And the second type of primary market distressed assets is what my company has been doing for 2 years now with my partners. These are financial advisors who basically build portfolios for people with stocks, bonds, depository receipts, and fintech projects. And they use real estate specifically as an investment tool. What do? We find a developer who would provide us with security because I perform due diligence at my own expense, checking everything, all the documentation. It must, of course, meet all the criteria for investment real estate that I mentioned to you earlier. And then we negotiate a substantial, decent discount with this developer in exchange for our guaranteed purchase of a large volume of apartments. You might think, well, you're not a wholesale investor, for example, and you're not ready to buy 3, 5, or 10 apartments at once. But that's not necessary because we organize this bulk purchase specifically for our already established investor audience. But as a new retail partner, you can take even just 1 apartment, or in some projects 2, at a price up to a quarter lower than the developer's price. We've been conducting these exact types of bulk buyouts for 2 years now. We've already bought about 140 apartments this way, and all the investors are, of course, very pleased with their returns and how profitably they're investing. Of course, I bought 5 apartments myself using this same strategy, so I've experienced my own product firsthand. Naturally, distressed assets have their own pitfalls too. For instance, many agencies on the island have now started claiming they offer bulk buyouts, discounts, and so on. But again, regarding discounts, you shouldn't just chase the price per square meter. First and foremost, you need to analyze how liquid the property actually is, whether it has potential or not. Because many people really want to dump their illiquid assets for cheap. And they're ready to offer maximum discounts no matter what. We don't want that. We only want high quality investment real estate right by the beach, but also at a price below the actual market rate. I'd like to go into a bit more detail on how we conduct these bulk buyouts. First of all, once you've found a truly attractive investment property, it's essential to conduct an independent legal check, which takes some time and costs a significant amount of money, services that clients and agents usually don't spend on, because here many people just sell, well, pretty much anything. Why is this necessary? To ensure that the developer's land, for example, is fully owned and not mortgaged, that all company directors aren't just figureheads, that the company isn't facing criminal charges, and that they have no pending lawsuits. In short, there's a whole range of criteria we check and uncover during the due diligence process. After we receive the due diligence report, we ask a huge number of questions. It's not just me, but a team of lawyers from my partners in the fund and financial advisors who deal with such, well, large volumes. because our clients' safety is our top priority. And we understand that people are investing huge sums, millions and tens of millions of dollars. So everything must be calculated down to the very last penny. And the second point is that we provide full support, including the investor's exit from the deal. That is, before entering a deal, we provide several investment strategies for how they want to manage their capital. It's either buy and resell. In that case, from the bulk buyouts we do, the investor's return reaches from 22 to 39% annually in foreign currency. Why such a wide range? Because we have 3 properties that we bought using this system, and it depends on the entry point. And the second one is the strategy. This is when we, for example, just go for a rental dividend strategy. Naturally, when you buy lower, you get a higher yield. In this case, it's a maximum of 11% per annum. Yes, guys, imagine at a price 25% below market, we only earn from 9 to 11% per year. So, if you're told about such yields on the primary market, you should think very carefully about why they're showing you those numbers and where they got them. Maybe there's some reasoning behind it, I'm not arguing. There really are projects with potentially good, high yields on the primary market. I invest in those myself. I get great numbers there right on the primary market, even without discounts. Those are rare cases. I highly doubt that most developers, when presenting such figures, can actually justify them. And the third point is when, for example, we've operated it for a few years, ideally 3 to 5 years, when the property is still brand new, fully promoted, and there's a lot of hype and demand surrounding it. And that's when we nicely pass it on to another investor, and from then on they just receive the profit, while we've locked in ours and taken the profit on top. That's also a great strategy. And now for the most interesting part, 3 projects and 3 price segments. Let's start with a completed property 50 meters from the beautiful, picturesque Nathon Beach. Why Nathon at all if I've lived in and sold Bang Tao for 11 years? Well, I'll explain it to you. Because Bang Tao is objectively becoming very oversaturated. Yes, the best infrastructure is concentrated here. Civilization, restaurants, beach clubs, basically everything. Bang Tao is my one love, and I'd only live here. But to come for a resort holiday to the beach and stay just 50 meters away and still be only 15 minutes from Bang Tao. Nathon is a very underrated location, and there's only one completed project there among the new developments. Actually, there are only 2 properties and 1 hotel, the Pullman. But of the completed ones, this is the only one, and it's also managed by the Wyndham brand. Our apartments, which we have directly from the owner, the investor bought a very large volume all at once directly from the developer, so of course he negotiated his terms heavily. And by keeping the money in foreign currency, plus just a tiny percentage, that's purely his strategy. He's now selling off this volume and reinvesting into the next property. So his motive is quite clear to me, basically. He's not chasing super profits, he's just preserving his capital in foreign currency, and sometimes without even making a 100% payment. Such charming apartments just 50 meters from the beach with the infrastructure of a quality 4-star hotel managed by the world-famous Wyndham chain. They are being sold at about 26 to 30% below the developer's price. This is pure gold, of course. Naturally, this is exactly what you should grab. Moreover, it's a turnkey rental business that's being leased out right here and now. And as for Nathon, well, it's in demand because it's the only project there and it's currently more expensive than Bang Tao, plus it maintains very high occupancy even during the low season. So it's a very undervalued property that I highly recommend to you. Next up is our favorite bulk buyout option. Here in Bang Tao, at Layan, we're buying out the wonderful Radisson Hotel at a 25% discount. Its first phase was just completed and commissioned, and the second phase is set to be delivered in just a year. What's the appeal? It's located just 350 meters from the beach, right by a national park and nature reserve, and it's managed by the Radisson brand. Previously, this hotel belonged to the Wanda Vista brand, but Wanda Vista, a Chinese management company, exited the global market and now only operates in China. And now Radisson Blu and Radisson Suites are moving in, with suites for the residential part and blue for the hotel section, respectively. The apartments are absolutely stunning. You can visit, take a look, stay there, and see for yourself how many tourists come, because they've signed contracts with pilots and airlines whose crews stay at this very hotel while waiting for their next flight. This ensures high occupancy not just in the high season, but in the low season as well. And of course, the influence of such a global brand also has a year-round impact. Apartment prices with our bulk buyouts start from, wait for it, $125,000. Considering this property is in Bang Tao, managed by Radisson, and within walking distance of the beach, this is all thanks to our exclusive terms. Naturally, you won't find such terms anywhere else on the market. I think that goes without saying. So let's move on to the villas. We have various below market offers, of course, but these villas are truly top tier. The developer is Botanica, well known, well loved, and incredibly beautiful. When people enter the showrooms, they're usually like, wow, wow, wow. And it's true, because the villas are indeed amazing. But these villas cost between $2 and $3 million, even though they're located about 2 to 3 kilometers from the beach. In this case, the client buys a volume of these same villas directly from the developer, just like with the apartments, securing their capital in currency with a small additional return. As a result, you can get these villas for about 20% less than the developer's original price. Of course, that's also a very nice bonus. Also, for instance, this client who sells his villas this way is willing to provide quality technical supervision, since the villas are at different stages of construction. Some are being built, some are finished, and some are currently unfurnished. So there really is a lot to choose from. And technical supervision is very important for villas, so the developer meets the deadlines. Very often, construction deadlines for villas in villages are missed, and it also ensures they follow the whole construction methodology, so that after accepting the villa, you don't have to spend another 6 months or even a year fixing it and correcting these flaws. Yes, it's the harsh reality of the local market, but that's how it is, and you shouldn't ignore it, right? Because it's a very, very serious and important issue, as people buy a villa hoping it'll be finished in 18 months, but it ends up being finished in, say, 28 months or maybe even 38 months. In short, it all depends on how professionally you bought it and what you secured in your contract, whether you included late fees, penalties, and many other things. All these properties I've told you about, and others in my exclusive and unique private offer, are all suitable for any investment strategy. Because regardless of whether you want to resell such a property later on, yes, of course, when you're selling at market price, you're not necessarily trying to sell it right here and now. But still, while you're selling it, it's being rented out, bringing you profit in foreign currency with 1% inflation. A super stable jurisdiction. And when a buyer is found, you can calmly sell it at the market price. So you can consider such distressed assets for yourself, for living, as well as for resale or for renting out. If you find this video informative and useful, please leave a like, I would really appreciate it. And also, if you're interested in buying real estate on Phuket Island, don't delay the process. Get in touch right now. Call us or message on WhatsApp, and my team of professionals will get back to you immediately. Maybe even me personally. So let's stay in touch. This was Diana Fedorova. I'll see you on Phuket Island.